Hi, my name is Keith Leveson. I am a broker associate for MVP Realty and the team lead for Migrate Orlando. I want to talk to you today about something that I find insanely annoying. Uh, it annoys me to no end, and that is when homes or properties are listed as investment properties, but whoever is listing the property, whether it's the owner who's selling it or the agent who's representing that seller or helping that seller, they don't know how to price an investment property. And we're going to actually go through a property that I came across. It seems like a reasonable deal. It's a quadplex. It is listed at 550,000. We're going to use a website that I personally love. If you're an investor, you probably already know about it. It's called Bigger Pockets. If you're thinking about getting into real estate investing, I suggest you check out their website. It is amazing, full of wonderful tools. And we're going to actually run the numbers on this property. So let's take a look. This property, as I said, is listed for $550,000. Now, we need to calculate closing costs. We're going to estimate 3% of $550,000 as our closing costs. Remember, it could be more than 3%, but we're going to just use that as a figure for today. So that gives us $16,500 as closing costs. We're also going to assume on this property that we have to do absolutely no rehab. That means when we walk into the property, we look, floor's fine, paint's fine, countertops are fine, which as an investor, you know is never going to happen. But let's just say in this case, it does. And there's absolutely no rehab needed. All right, let's go ahead and we're going to move on to loan details. We're going to put this as a 20% down loan, and we're going to calculate interest rates at 7.25. Now, we know for investors, interest rates are probably higher right now, but that's again what we're going to use for today is 7.25. We're going to use a loan term of 30 years. Okay? Now, moving on to income. You see this 1930, $1,930 a month. We're going to actually ignore that because this property actually has all 4 units of the quadplex currently leased out. So we're going to calculate based off the numbers that they give us. They tell us that 1 unit is rented out for $1,200 a month. The other unit is at $925 a month. The third unit is rented out for $1,000 a month. And the final unit is rented out at $800 a month. And that gives us a grand total of $3,925 gross monthly income. Again, you know, right off top of your head, you might think, hey, this is not sounding like a bad option for an investment property. Let's go to expenses. Property taxes are $3,480 for this property. It's not homesteaded because it is an investment property. So we know the property taxes are probably pretty close to where they should be. We're going to go ahead and we're going to estimate insurance at around $3,000 a year. We're going to do that because here in Florida, insurance rates have been going up and we are averaging somewhere between $2,000 to $3,000. Let's go ahead and take a look now at repairs and maintenance. Repairs and maintenance, you want to calculate between 5 to 15%. Personally, I like to aim for the middle. So we say 10%. Repairs and maintenance, these are things that we're talking about, like the new paint. A toilet breaks and we need to replace a toilet. Not new plumbing, just a toilet. Simple things, okay? Vacancy rates, we're looking at approximately 7%. Capital expenditures, again, these are things more along the lines of new roof, new AC, new water heater. You can calculate these at 5 to 10%. This property in particular has a brand new roof that was installed in 2021. Now, I didn't do this when I originally ran the numbers on it, but let's go ahead and do it now. I put it at capital expenditures at 10%. Like I said, I like to be in the middle. But let's go ahead and put it at 5%. You're still going to see what's going to happen here. We're going to put it at 5% just in case that seller and their agent come back and they're like, it has a new roof. You're calculating too much for capital expenditures. Fine, we're going to put it at low 5%. Management fees, always calculate management fees. Even if you're managing the property yourself, you have to remember, one, that takes your time, all right? Also, eventually, the hope is if you're investing in property, you're going to get so many properties that you're going to get to a point where you can't manage these properties on your own anymore. So it's better to start calculating these figures now rather than later. Average management fee is 10%. We're going to put 11%. Why? We're putting 11% because not only is the average management fee 10%, but oftentimes they're going to say, hey, we're going to take half of the first month's rent, or half of the last month's rent, whatever it may be. So we're going to calculate it at 11%. All right, electricity, we're not going to put anything. Gas, water, sewer, we're not going to put anything. HOA fees, this property has nothing. Again, we are going to say these people are paying electric, gas, water, sewer, garbage, all on their own. All right? Now, let's analyze the property. So we scroll up and look, you are making a negative $911 a month on this property. Congratulations, you're bankrupt. Because the people who are selling this property or listed it did not calculate expenditures. They did not calculate the real cost of running a absentee owner or a rental property. This is listed as a home that you're going to buy and move into, but you're not buying it and moving into it. You're a landlord. So let's see approximately how far over this property is listed. It's listed at $550. We're going to change the sale price. Let's change it to, let's try $275. Let's just try $275. Let's see what happens. All right, $275. Okay, so $275, congratulations. You're making a cash-on-cash ROI of 9.8%. We all know for investors, what we're aiming for is 7 to 10%, typically cash-on-cash ROI. So this property is approximately overpriced by $275,000. This is why, if you're listing a property to sell that is an income-producing property, you need a realtor that knows how to run these numbers. On top of that, if you're looking to buy property as an investor, you need a realtor who knows how to run these numbers. Now, I run these numbers for my customers, but I always remind them they need to also run the numbers. The reason for that is because it's your money. You're the one who is going to get bankrupt if this doesn't work out, not me. So what does that mean? Take control. I am here to help you. I'm here to guide you. But it's your money on the line. So be smart, educate yourself, analyze investments, and don't get drawn in by fancy these flashy quadplexes, investor special, all these terms that they throw at you when they didn't do their numbers. If you want somebody to help you run numbers, I'm more than happy to help you. If you're looking at buying a home to live in, this calculation is for investors because they're looking at how to make money on a property. This calculation should not be used for first-time home buyers or home buyers in general. These calculations are for investors only. If you want to know more about looking into properties as a first-time home buyer, we'll go ahead and we'll run a CMA together. If you would love to see that, please like, subscribe to our channel. We'll go ahead, we'll set up showing you how to do a CMA. You could run those numbers yourself. We'll show you how to do that. I'll show you how I do it. And if you're an investor or a home buyer and you'd like to talk more, please click on the link, set up an appointment for a consultation. I'd love to talk with you. Or you can use the QR code to get access to my calendar so we can set up a time to talk.